In today's video, I'll take you through the process I follow every single morning to determine which volatility box models to use. Now we'll go through 10 major futures markets, and this includes the S&P, the Nasdaq, the Dow, and the Russell, along with some other markets like crude, gold, silver, etc. Now our goal going through each of these markets is to determine what does the volatility landscape look like. Now up here, you'll notice I have 5 different volatility models. From left, we have the scalper, and on the right, we have the doomsday conservative models. Think of this as a ranking scale, 1, 2, 3, 4, and 5. As we go up, we're increasing in volatility, and if we're towards the lower end, so meaning we're on the scalper, that means we have very little volatility in that market, and we can look for scalp trades. So let's start with the S&P 500 first, and I have the scalper loaded on. Now what we're looking for is, has price touched either side's cyan entry lines in that first hour that the market's open? So the S&P opens at 6:30, that first hour is 6 to 7 a.m., and in this hour, we're trying to determine what did the volatility look like. Did we see buyers rally and bring price action up to the upper volatility box? No, not in this case. Did we see sellers do the opposite? No, not in this case. So the S&P, we know we can continue to look at scalp opportunities. So let me bring in a notepad here and we can write that down, ES scalper. Now we move on to the next market, which is the Dow futures. So I'll load in the Dow futures and we repeat the same idea. Now inside of the Dow, you should notice we got a lot closer to the cyan entry line. So you might deduce that there's more volatility in the Dow compared to the S&P, but even here we still did not touch the cyan entry line. So still we know that, hey, we can continue to use the scalper models on the Dow. The reason we're looking at the scalper is that's where our normal entry would be. So if we did breach it, now we want to see, well, okay, if we did see selling strength that much, we also want to see the buyers reverse price action. Here, we didn't get close to the cyan line, so we know that the sellers are not strong enough to take us all the way down there. We can continue to look at scalp opportunities. Now, next up, we have the Nasdaq futures. And before we go there, let me add the Dow here to the scalper as well alongside the S&P. Now, next up, we have the Nasdaq, and the Nasdaq looks a little bit different. The Nasdaq here did breach the cyan entry lines, and we see a whole lot of price action since. Now, what we're looking for after we hit our cyan entry lines is to see this level being defended. So in this case, the buyers are telling us that there's a lot of strength. Now we need to see the sellers defend this level. The way we see them defend this level, do we hit T1 before we go outside of our volatility box clouds? So in this case, the stop is about 21.5 points away, and we're looking for that same 21.5 in the opposite direction. And we got that here. We went all the way down to about 23.5. Let me show you that again. So here you can see from our cyan line to the low, 23.75, and from our cyan line to the outer edge of the clouds, we're closer to that 21 point mark. So far we can see that the sellers are defending this level. However, into the close, we had one more touch of our cyan entry line here. And this time you can see that the Nasdaq does not have the same level of sellers hanging around. Here, the buyers have a little bit more control, and we've seen that the buyers have taken us outside of our volatility box clouds before again seeing that same reversal that we were looking at earlier. It doesn't matter if it's a retest. Every single time we touch the cyan entry line, we want to see it being defended. That gives us the confidence that, hey, there are sellers hanging around here. So in this case, we see the buyers are winning, so the Nasdaq is broken outside of its scalper. Here we have a breach. Here we don't see the sellers defend. They do it once, but then we have a retest, and this time the buyers are winning, and that's all happening in that first hour that the markets have been opened. Very clear sign that the Nasdaq has much more volatility compared to the S&P and the Dow. So here in our notepad, I'm going to add the Nasdaq, but this time the Nasdaq is on its aggressive models. Now next up, we have the Russell. Let's repeat the same process. You should be getting a lot better at it. The Russell, the first time we breach the cyan entry lines, right here, we see the buyers defend. So far, the Russell's telling us the scalper's good. Now in that same hour, we have a second retest here. So one more time, the sellers are bringing price back down to the sign entry line. Now our stop, remember, is outside of the clouds, and we're looking to see that we hit our first target before we go outside of the clouds. Now in the case of the Russell here, we can see price drifted down, but we didn't go outside of the clouds. We went only about 2.5. The clouds was close to about 2.9 points away. Now you can see the buyers came in, defended this level, and we easily have surpassed that 2.9. In fact, we went all the way up to 6.9. So here, unlike the Nasdaq, the scalper models are telling us on the Russell that, hey, you can go ahead and scalp on the Russell. The scalper is being respected. So I'm going to add the scalper up here alongside the S&P and the Dow. So far we have the S&P, the Dow, and the Russell on their scalper models, the Nasdaq on its aggressive. So we can also grab a clue here that we expect the volatility in the S&P and the Dow to catch up to the Nasdaq as the day progresses. That's what typically tends to happen. We don't see them diverge too often. Next up, we have the 30-year note. The 30-year, well inside of its scalper volatility box models. In fact, I have to shrink the y-axis here for you even to see that first morning's clouds. So the 30-year bonds are all good on their scalper volatility box models. So here I'm going to say ZB, and we'll add an aggressive, but we can be observing this on the scalper. And the reason I say aggressive is that's the lowest model we have available for the Dow. The scalper is currently in test mode and is available to all volatility box members. Now next up, I have crude oil. Same idea, the scalper is being respected. So crude, we can still continue to use the scalper. Natural gas here, same idea. We had a breach. We saw the buyers defend these levels. We had another breach. We saw the buyers defend these levels one more time. The scalper is giving us the green light in natural gas as well. And then finally, we have copper. And inside of copper, same idea. We haven't breached the sign entry lines. So all of our energies, crude, natural gas, and copper, are all on their scalper models. They're all being observed on their scalper. So if we come back into our notepad, here we'll say crude, natural gas, copper, same idea as the Dow. They're on their aggressive models, but we're observing on their scalper, and the scalper is being respected so far. Now finally, we have our last two markets, which is gold and silver. Now in gold, you can see in this first hour, we continue to respect the scalper models, but most recently, in the tail end of that 6 to 7 a.m. Pacific hour, you can see here that we have a breach of our sign entry lines. Now this happened at the edge of an hour when we're not looking at putting new capital at risk, but what we do know here is volatility is starting to pick up inside of gold. So we want to see the buyers defend this level, same idea as what we've been talking about here. The minimum points that we're looking for inside of this gold trade, 2.1, so far the buyers have only taken us up to about 1.7. So we need to see price hit 2.1 before we can continue to use the scalper models. And until we hit this level, so call it 2004.2, you can see that on the y-axis. So until we hit either 2004.2 or we go outside of the cloud, so below 2000, we're not looking at new entries in gold. So now if we come into our notepad, we can say gold is on its scalper models, but we're monitoring to make sure that we hit 2004.2 prior to 2000 is what we said. If we do go outside of 2000, then that's our sign to switch to the aggressive volatility box models. So that's how we can interpret this volatility inside of gold. And then finally, we have silver. And if we zoom out on silver, in silver, you should notice different volatility. We haven't hit the sign entry lines. So silver, much less volatility compared to gold. So between silver and gold, we know that gold is the more volatile market today, where you might find some nice scalp opportunities. So coming back into our notepad here, I'm going to say silver, and we're going to add a scalper. And just like that, we have our volatility models for the 10 major futures markets we'd like. We have the S&P, the Dow, and the Russell all on their scalper. We have the Nasdaq on its aggressive models, and as a result of that, we have a clue around what to expect in the S&P and the Dow. The 30-year note is on its aggressive volatility box models, with the scalpers being respected, and same idea inside of crude, natural gas, and copper on the aggressive models, with the scalper being respected. Finally, we looked at gold and silver, and gold was the one market with an active test. That's why we have all of this extra text here. We're looking at two key levels. Do the buyers here reverse price action and take us to what would have been our first target? Or do the sellers instead win and take price below our clouds here? If the sellers win and price goes outside of the clouds, well, we know that, hey, we don't really want to be trying to play scalp opportunities here. The sellers are much stronger. We know we don't want to use the scalper models, and instead we need to switch over to the aggressive models. And that's it. That's a simple example of this 10-minute volatility process, but yet another example of it. The last time I gave you an example was 2 years ago. Well, now we've done the same process. Nothing's changed, but you've been able to see another example of it in today's volatility. I hope for all of our futures Volatility Box members, you found today's video to be a helpful demonstration of how to go about repeating this process every single morning. Take care, everyone. Good luck trading, and I'll see you in our next update.